Okay, how about we get started? All
Yeah,
right.
let's do it.
Thank you everybody for taking time out of your day to join us this morning. I know it's Mother's Day weekend. Welcome to Aura LLP's second real estate webinar. This is the second installment of our series, and this webinar is on investment. So we're going to run for about an hour today, about 45 minutes of this table talk discussion, and then we're going to open it up formally for a Q&A in the last 15 minutes. So this recording is being recorded, and we're also streaming live on YouTube on our Aura LLP YouTube page. So we're going to take comments from there as well. And just a legal disclaimer before we begin, nothing in this presentation, in this webinar is intended or actually is legal advice or realty advice or investment advice. And you're encouraged to seek your own independent legal advice or financial or realty advice if you need that. So what we're going to do today is the format is a table talk, but we will be having also more of an agenda that we're going to talk about. So we are going to be talking about, let's get the agenda here. So we're gonna start with a market update. We're going to talk next about goals of investment. We'll talk about the investment climate. Is this a good time? Is it a bad time? What is the climate like? We'll talk a little bit about assignments and pre-construction. We're going to talk a little bit about legal issues and delayed construction, assignments, and force majeure clauses as well. We're also going to talk about the supply and demand equilibrium and the market fundamentals of where everything is today. And if we have time, we'll touch on mortgage deferrals and whether or not that's a good idea and how that all works. So we encourage you to get involved. So there are two ways to do that. There is a poll at the bottom of your screen, which I'm just launching now. So these are the areas that we're going to touch on. Please let us know what you would like to focus on. So the poll is open. It's all anonymous. If you want to vote and let us know what's important to you. There's also a chat function at the bottom there. And if you want to say anything in the comments, ask a question, you can do that. And then for everyone on YouTube Live, you can do that there as well. So please get involved at any time. We'll take questions. We want to have a nice table talk and a very flowy, moderated discussion. So without any further ado, let's introduce everybody. So I'd like to go around the table. Lou, why don't you start with you? Why don't you tell everybody about yourself?
Yeah, so my name is Lu Zhou. I'm with Century 21 Heritage Group, so I am a real estate agent, and I serve the Greater Toronto area and also specific areas just outside, so little pockets. I've been in the industry for about 4 years now, and I specialize in resale as well as pre-construction developments. I've worked with developers on selling their projects and, of course, helped buyers purchase pre-construction projects. So that's my main area of expertise.
Okay, fantastic. And Ryan, what about yourself?
Hi everyone. I am so primarily I'm a residential real estate and commercial real estate lawyer. We handle transactions of all sizes. I'm a partner with Andreas at Aura LLP. I do a bulk of the real estate work for the firm, and I also have just a general interest in real estate overall, and so. It's about contribution of thoughts here, and that's sort of why I'm on the panel.
Okay, and we also have Shehan McLelland as well. So Shehan, do you want to introduce yourself?
Yes, hello everyone. My name is Shehan, and I have a financial background, financial sector. I've been in the financial sector for about 12 years. Focused on lending now, personal lending, as well as development, construction lending as well. And I love real estate investing. I've been investing for the last 5 years here and in the US. And I'm in a position now where I'm looking to grow my portfolio. So I left the corporate world and really focused on the real estate development side.
Okay, thank you. And I'm Andreas Kalajanides. I'm a founding partner of Aura LLP. My law practice specializes in business and entertainment, and I do real estate as well. And I'm also interested in just following the market and real estate investing in my personal life as well. So let's get started. I'll start with you, Lou. Where's the market today? What are you sensing of what's going on? Where is everything?
Yeah, so I'll start off with just some stats. I mean, obviously our April numbers came out and the GTA sales are down about 67%, okay? So our total sales, I think, for last month was just under 3,000. So I think about 2,975 sales were made in the GTA last month. So comparing that to 2019, in 2019, we had about just over 9,000 in sales, okay? Now that being said, our listings are down huge as well. They're down 64% compared to last year, okay? What I'm noticing in the market is our inventory is still relatively low. We're at about 10,700 as of early this morning. And we've been kind of rotating between the 11,000 mark and the 10,500 mid-range, okay? So that is still somewhat of a seller's market. We get to more of a buyer's market when you get to around the 13,000, 14, and so on and so forth, right? So for me, when I'm out with my buyers, I was just out in Pickering, Richmond Hill, North York, and there's still multiple offers. I'm seeing it's not as heavy as it was in the beginning of the year where, there were firm offers or, 10 offers on a property, but still in less than a week, there's like 3 multiple offers, with the property being on the market for about 3 days, right? That being said, of course, there are other properties that have been on the market that have also seen with 60 days on the market, such and such, but those properties I feel are also a little bit overpriced, or they're just not in the showing condition, or they don't allow showings, okay? The GTA overall, our selling price is up 1% compared to last year. If I were to break it down into more of a specific area, our Toronto prices are down about 2.5%.
Okay.
Interesting.
Does anybody have any other thoughts on that?
I just wonder, Lou, I think it's interesting that you're tracking this, but I wonder if from what you've seen in terms of from April to May, if you're already seeing a shift or what the changes were specifically. I think as well, I know that this is part of the rundown here, but I'm just sort of getting a jump on it, which is I wonder if you're seeing something marked in terms of the difference between what you saw in April and what you're seeing now. The reason I ask that is because I'm wondering specifically, are there different kinds of properties that are lending themselves to being more in demand given the circumstances, and there are properties that are less in demand as a result? And, I'm just wondering what your picture is on that.
Yeah, great question. So what I'm realizing is it's the properties that are selling quicker are probably in the 1.1 range and under. Okay, so more the luxury market, a lot of people are taking a hold back. So they're really waiting to see kind of what happens. But everybody else that's maybe a first-time home buyer trying to get in, they're trying to capitalize on this market, right? So it's in the lower kind of price range. In terms of if I were to compare April to now, the beginning of April was a little bit slow. Okay, kind of matching what happened at the end of March, right? It was a little bit slow, but ever since news started coming out towards the end of April about how things are starting to open up, I know, Trump was saying that he's going to start opening up in the States. That honestly trickled an effect in, with the psychology of buyers, right? And even now, the first week of May, I'm seeing a lot more people come out. I'm sure the weather has something to do with it because we've been cooped up for 2 months. But just me personally, our pre-construction registration, we're getting like almost double now every day. people are calling. My clients that were kind of waiting on the sidelines are ready to come back in the market. So I think it's just a psychology of, you know, they've been cooped up for so long, and now that they're hearing news about things are starting to open up again. I mean, even for us here, right? You know, specific stores are opening up again. It's positive news. So I'm seeing more people come out.
I think that's a really good point. I think the market's been in a really freeze period and a wait and see, and there's a lot of factors that go into that. Of course, the social factors, the joblessness, the economic factors, and just the general uncertainty. And I will say though that there are projects that are pre-construction that have sold very well during COVID. So I know Graybrook has a project at right by the AGO called Artistry, and that sold $14.50 a square foot, 220 units, all went. And they firmed up during COVID 3 weeks ago at 76% of all the units. So, you know, and then like Lanterra's got another development at Eglinton and Royal York, and the same thing that was sold pretty much at an 80% completion rate at a good price per square foot during the COVID situation. So there are a lot of projects, to your point, that are moving forward, and of course our people are continuing to buy them.
Right. Interesting.
So, okay, Shehan, do you have any? What does it look like from your perspective?
From the finance side, I think it's the lending criteria, and the lenders are really holding back right now. The appraisals are coming in a lot less than what we're used to seeing for the same house year over year. So the lenders are very hesitant to be bullish. I think some secondary lenders are still taking the chance, but it's really not putting the client in a good position, right? So I think it will depend on how willing the lender is going to be to give the money that will kind of impact the prices as well.
Right. Okay.
What have you seen, I mean, in terms of, like, let's say you had a client that was maybe pre-approved, December of last year, they didn't find anything, now they're coming back to you to maybe, you know, check on the numbers again. Like, what has that difference been? Has there been a huge difference of, you know, pre-qualifying them again? Or, you know, what additional pieces of documents are you guys requiring now?
Well, the pre-approval really doesn't mean anything.
Right.
It's just for, I guess, a starting point so that the builder or the realtor can kind of have a sense of confidence that, okay, here you go. Pre-approval is usually good for about 6 months. But when you go in, when the deal is done and when you go in to qualify, they redo the numbers again. They redo the credit check again. I've seen situations where somebody's been pre-approved and, you know, they think the deal is done and the mortgage is going to close, but then they go buy a car. And then when they come back to finalize the deal, the TDS, GDS is gone. So really and truly, it comes down to what your circumstances are. If right now, if you're self-employed or if you are a variable employed person, it's going to be very difficult or more difficult than, let's say, a salaried person that has continued to work through the COVID situation to get a loan. Because the lender now wants to see, okay, what is your guarantee or what is your certainty that you will have income in the next month or 2 or 3 to actually start paying your mortgage.
Got it.
So that's a good segue maybe into talking a little bit about the goals of investment. So, you know, we're talking about people who are in different positions financially vis-a-vis what jobs they have. So Shehan, like, how important are your investing goals when you're looking at making a big investment?
That's the key part. You really have to know what your goal is. You know, is it cash flow? Is it equity buildup? What is it? I think the most general question people ask is it a good time to invest right now? And the question I would say, maybe, right? There's opportunities when the market is hot and there's opportunities when the market is low. I would say there are more opportunities when the market is down just because you're buying it at a discount, right? But it really depends on what your end goal is to your cash flow or your equity. If you have a whole bunch of money sitting around and you don't know what else to do with it, buying a project or buying into an investment that will show you returns 5-10 years down the road in the form of equity might be good. If you're close to being retired and you're looking at transitioning into cash flow, then you really have to look at, okay, what is my rate of return? What is the risk tolerance I have? And look at what investment might fit that need better.
Yeah. Just to add to that, I wonder, Shehan, if you could speak to the fact, or are you giving people specific advice these days, given the circumstances, about vehicles or investments that would be more ideal in this climate versus others? So in other words, is it better to have a cash flow strategy now, or is it better to have, I don't know, like a fix and flip idea or like whatever? Like, I'm just wondering whether you have some thoughts on that, or you know, what you've been telling your clients kind of generally.
Yeah, I would tell them, what is your immediate need? What is your long-term goal? I think right now, cash is king. Myself, I'm hesitant to jump into any projects right now unless I know the cash on cash return is there, or it's a short-term project. Then I might jump into it. But I think my personal opinion, I don't know what the market will do, but I think there will be some deals to be had later on. So I'm telling people, you have to consider what your short-term and long-term goals are. It's not going to be a quick, it's never a quick flip. Even a quick flip can be, disastrous. So you have to take it, you can't look at it as quick money. You have to look at it as a strategy in a portfolio to say, okay, how much of my money do I have to play with? How much do I want to put into cash flow? How much do I want to put into long-term strategy? There's a few things you got to look at, and it really is individual.
Right.
So, I mean, one of the things we talked about kind of before this conversation was like kind of the investment climate in terms of we're seeing less competition and transaction volume. So we're seeing that there's just, there's not as many people bidding on the same property. Shehan, we talked about like a lending crunch and just the worrying of debt to GDP ratio. What are your thoughts there?
In terms of the debt to GDP, Canadians are at about 176%, meaning if you earn $1, you owe, you got to pay about $1.76. So I think that part is a key factor to look at in affordability. People are paying minimums mostly. People are extending their mortgages to 30 years. So they haven't really felt the crunch of having to pay back. In the last 10 years, we've really looked at appreciating house values, and people have just tapped into that as a bank account. And I think that could play a key role when it looks at, debt ratios and debt utilization, right?
So do you think that the debt utilization is that segmented by market, say the downtown Toronto market versus Ajax versus Midtown versus Brampton? Do you see differences there?
I haven't really broken down into segments of that nature. You tend to see families being more in debt just because they have kids and they want to send them to school, or they end up buying a bigger car or multiple cars. So I don't know about geographic locations, but certainly I think the bigger the family, or they seem to have more debt on their plate.
Yeah.
Unfortunately.
Yeah, it's a tough time.
Do you think that, just going specifically to some of the solutions that there are right now, I mean, people are deferring their mortgages. You're right about the amortization rates. Like, some banks are probably negotiating out, longer amortization rates if they want. But, the specific solutions that have come down from the government, the question is, and, you and we talked about this a little bit off camera, is deferring your mortgage a good idea? And the question is it's a question of cash, I suppose. And so maybe you could talk a little bit about that, because you had some pretty good points about that, which is, it really depends on your circumstances. So what circumstances do you think are favorable for you to do something like that?
So in a general broad stroke advice, deferring a mortgage is never a good idea. People tend to think it's, I don't have to pay for 6 months and then I'll carry on after that. But really, all you're doing is deferring your principal payments, not your interest. So the bank or the lender is actually continually incurring your interest on top of interest. So in 6 months from now, you'll have either a larger payment in monthly terms, or you'll have a larger balance in a mortgage term. So I'll give you an example. Maybe this might help kind of paint a picture. Let's say you owe $500,000 on your mortgage, and it's 20 years remaining, and you're at 3%. Deferring your mortgage for a month might add another $20 to your payment, and maybe another, I would say, $1,500 to your overall cost. But now, if you defer that same mortgage for 6 months, you're adding maybe about $100 a payment, and then about $5,000 to $6,000 at the back end of total interest, right? So you're going to be paying it one way or the other, and you're going to be paying more if you defer it, right? So it's, to me, deferring, if you can afford it, you shouldn't, just because the option is there. Now, if you think your cash flow is hindered, and you don't know what your income is going to look like in the next few months, and you want to make sure your cash reserves are high, then maybe it's a good idea, because once you pay that mortgage payment, you're not getting it back, right? Unless you go do refinancing. If you are, I would say, renting a house, and your renter is in financial distress and they need relief, then maybe you might want to look at that, right? You still may want to pay that mortgage payment and figure out how the renter is going to pay you back. But you may want to just go ahead and say, you know what, let me defer that for a few months, because that interest is now a write-off, right, as a cost. So it's not on you.
Right. So you mean in the context of if you have an investment property and somebody's in there and they can't pay their rent, probably it's a good option to then say, okay, well, we'll defer, because really they're deferring because they can't pay right now.
Exactly. Yeah. And you have to qualify as well. It's not like hey, here you go, everybody qualifies. You have to qualify as well.
Right. Yeah.
I see a geographic element to it, because it's the figures are such that about 10% of Canadian homeowners have applied for a mortgage deferral. But that's not also equally spread out in different places. So the West, Calgary, for example, is being hit very hard with the oil crisis, the economic issues that they've been building up there, and then COVID. So they're getting slammed, and you're seeing that the rate of deferrals is higher in those markets as well. And so, I mean, this is, I have a perspective that I don't think all markets are all the same. I think when we're talking about real estate asset classes and strategies, it's important to keep in mind that not everything is going to be the same in Toronto as Ajax, as Calgary, as Brampton, as wherever. And when we look at figures, and they talk about Canadian figures or Ontario figures or whatever it is, you're looking at very, very broad swaths, and real estate is very location based, very geographic based, right? And so I think the fundamentals of what the indicators might say are different from place to place.
Yeah, totally.
I think I want to touch base on, like, if people are thinking about investing in the market, what they should be looking out for. I think if you are looking to purchase a pre-construction, I'm seeing more developers now. In the past, I would say a week and a half. Now they're coming out with incentives. I've seen a lot for the frontline workers. We did that probably, I think, end of March. We did a cashback for people that are frontline workers. And now I'm seeing more developers do that, as well as just being flexible with incentives, deposit structures, if you're an investor paying their rent for 2 years. But I think for the person that's maybe possibly going into the market to look for an investment, and you're looking at the pre-construction market, I think the number one thing you should be looking out for right now is future value. And the location is, of course, going to be king, right? That's what we always say in real estate. The most important thing is location, location, location. But I want to break that down into what makes a location good. So accessibility, right? So your accessibility to highways, amenities, if the area is undergoing construction, if new transit is coming in, if there's a revitalization, happening within the neighborhood. I think those are going to be key in terms of if you are looking to purchase a pre-construction that's maybe closing in the next 2, 4, or 5 years. That's going to be important. And, since we touched, I think we briefly, off camera, we briefly touched upon Airbnbs. So Airbnbs right now in specific areas, they're still doing really well, right? But if you're looking to purchase a property that is going to be Airbnb, if you're thinking about doing Airbnb, you need to put it in an area where local people now want to go to. So your north areas, right? Close to the forest. So I have an Airbnb up in Innisfil that's right across from the beach, right? I was really worried about it. I didn't know if we were going to be able to get people come in and travel, but there's a lot of local people that are coming. Okay, another area would be Toronto, but Toronto is also oversaturated, right? There's so many condos up for Airbnb. So that's what we see. And Shehan, maybe you can touch upon that because you had a really great point earlier. But those rates have come down, but there is a lot of people that are up in, Richmond Hill, Aurora, that when this is all over, they want to spend, a weekend in Toronto. So it's thinking about where you want to do that Airbnb. I mean, location is going to be key. And now it's focusing on your local market versus, people kind of traveling over.
Yeah, that's the big trend that's coming out of this is everything is going to go hyper local because
Absolutely.
It's impractical to travel and the travel industry is you're going to have a long road to recovery. So everything is going to be hyper local, driving 3 hours, 4 hours, taking a train somewhere. So that's good as well. In terms of also just Airbnb, one thing to look at when you're looking at assignments or a pre-construction is what the condo bylaws are going to be like, because it's not the case that all Airbnb, all condos or whatever neighborhoods are going to allow Airbnbs. So when you get a pre-construction, an APS, you should be very careful about reading the if it's a pre-con, the draft bylaws and what they're thinking, because if the condo corporation just outlaws Airbnbs outright, which many do, then you're not going to be able to do that.
Yeah. I think just to add to that, it's completely true. I mean, you have to be very careful with condo bylaws. I think that's it's often overlooked by most people for pre-construction. There's usually non-bylaws, to be honest. There'll be a declaration and then you get bylaws a little bit later on. But, I think, one of the best advice that we tend to give our clients with pre-construction is, look, you got to get involved with your board because you want to be able to set the tone there, because otherwise you may end up in a situation you can't control. I think on the resale side, it becomes very tricky as well. If you're coming into a condo now and there's specific provisions about rules or regulations about renovations, as an example, where you cannot renovate right now. And the thing about a bylaw like that is it's enforceable and it's allowed. I mean, you can't overstep the rule there. You have to get approval from the board to do anything that's kind of contrary to any bylaw that's there. And so, yeah, I think it's a really good point. You got to be really careful, especially in this climate, about Airbnb as well. You don't know, like a lot of condos will sort of restrict that. There's not a whole lot of law saying you cannot do that right now. So, it's for the most part permissible to prevent you from doing it. So it's tricky. I mean, it's tricky. You got to be very careful.
It's funny you mentioned that. I had a client the other day that they just purchased a condo in downtown Toronto, and they just moved in, wanted to do a whole bunch of renovations, and long story short, they ended up getting the permission to do the renovations, but because this is during COVID, everybody was home, and it became a big issue for all the other residents, and there's a whole mess of complaints and with the management company and the board and the client because of the fact that everyone's just at home right now. So that just happened last week. Yeah.
I mean, it's funny. We've had a few clients come in on this issue, right? On the issue of renovations. I mean, I think, and condo boards had I'd say up to a couple weeks ago, condo boards were saying, look, we've implemented a new rule, which is that you cannot have construction happening now. and court. And I think actually one of them has gone to court somewhere in York region, gone to court and had an order come down that says, look, if that's what the bylaw says, it's what it is, And so, or not the bylaw, but if that's the rule that's been implemented, then that's just sort of, that's going to have to be followed. And if it isn't followed, you're subject to liability, et cetera. You may be forced to pay damages later on. You just don't know. So it's very tricky. It's very important to check out the rules, regulations, and the bylaws in the building.
So we just had a question from Victor, and his question is, how do you find strictly land deals now? That's a Ryan or maybe a Shehan question. Maybe it's a Lu question also.
Yeah, I mean, I can touch. I can probably shine a little bit of color on this, and then Shehan, if you want to, I'll pass it over to you. But so, I mean, honestly, a lot of off-market deals are done pretty much between agents. Developers are selling now as well. I do know a few smaller developers that are selling. Victor, if you want to get in touch with me afterwards, that's I can definitely do that. But a lot of it is also done off-market between other agents. So there are little communities or little like WhatsApp groups that we kind of share our off-market properties. Mainly, a lot of it is land, commercial properties, things like that. Shehan, do you have anything to?
I'm not, again, I think it's off-market deals in terms of knocking on doors, finding out who the owner is and talking to them. So one of the deals we're working on right now is actually with the town of Ajax, and a developer had come in, had proposed to build this condo unit, couldn't get it done. It's been delayed 5-6 years now, working on bringing a different builder in. I found it because I was interested in it. I grew up in Ajax, and I went into the town and I found out what's going on and kind of digging in. It's not going to be given to you in a silver platter. I think and by the time it hits the market, really it's already too late, in my opinion. Now then you have everybody else looking at it. I think it's good to start with where you want to be, right? What location or what area that you want to be, and then even just driving around and to see what's available, what's not being built. There are different stages that a builder might sell it off at. You buy it, get an approval for one thing and then sell it off because the appraisal value's gone up. You get site plan approval and you sell it off. So it depends on really where you want to be. Some luck, because sometimes you catch an owner that wants to sell one property but not the one you're looking for. So it depends on flexibility and your willingness to go knock on doors and really dig in.
Yeah, it's a great question.
To add to that, I was just going to say, I mean, I think that if you're, you're so right about what it is, like in terms of where you want to be. And then you gotta just understand a little bit of the subtleties of your, like if your objectives, it really depends on your objectives with that land. Like, what are you going to do? Do you want to build it out? If you want to build it out, then you've got to ask yourself, like, okay, well, do I need land that's sort of halfway there in terms of it's got permits, it's got zoning issues already dealt with, or are you prepared to deal with those issues? And then what are the costs associated with that? And then you really gotta ask yourself, okay, like if I want if you want to, there's, I think when you start to look at land deals, it's a very different, it's a different climate in that builders have a very different demand. They're looking for things that are hot, but not hot now, hot in maybe about 10 years. And, so like a place like Newmarket where Lu, she knows this, it's a very hot market for builders because, you got a lot of land there, but there's a lot of demand to be out there. Or at least there was anyway, prior to COVID. And so to buy a big piece of land out there, I think I was just looking at something out there actually off just Main Street. And
there's a lot going on in Newmarket. A lot of
things. And honestly, I was shocked by the prices because, or at least the listing, what they were thinking about listing it as, because most of it is off market. And the reason is because you may not have kind of the general consumer base there, but you do have builders that are super interested in being there. So you're going to be bidding for properties like that,
that's the thing
in areas like that. If you want to go further out, that's a very different thing. You're taking a long play, you're looking at it, you really got to map that out, understand the environment, understand the costs associated with. And then again, ask yourself like, okay, can I take it at a different level? Can I take it at a without zoning? Can I take it without plumbing and electrical built into the land? And am I prepared to shoulder all of that cost? So it's a pretty complicated conversation. It's almost like we need to have another webinar on that issue, I would think. But,
just to add to that, there, especially in Toronto, because I really think from my perspective, all markets are different. So when we talk about the Toronto and GTA market, the development community is very well heeled. And so it's the same with the landowner community as well. And, the market will continue to work until, people in the market, buyers and sellers, no longer wish to transact. The moment that people are literally not buying and selling, that's when the market will collapse. And that's just not the case now. And you're seeing that from what I'm hearing and being told with land opportunities where, you've got landowners, especially in Toronto, who have held land for a long time, 5 years, 15 years, 20 years, even longer. And so they're not rushing to sell over the next 6 months, 10 months, because they don't have to, because they're very well capitalized. Developers are also very well capitalized. They've been booming for the last 2-3 decades. And so those groups of people all have the ability to wait this out. And they do know that the market fundamentals have not changed. The Canada is still welcoming immigration at about 340,000 per year, and almost 250,000 people come into the GTA. And that hasn't changed from even the 2-week, the numbers of applications that have been granted in the last couple of weeks. And so what I'm trying to say is that their land deals are possible, but what you're seeing is mostly people who are holding land and holding opportunities and waiting. And then you also have everybody, developers and landowners, all calling each other and being like, hey, what can we do? And so I don't see that there are going to be a lot of deals that are based on distressed development opportunities in the GTA. I think that's different. And I think there are some projects you can pick up or some land you can pick up. But I do think that people are not really rushing to sell because, again, the market fundamentals over the medium and long term are just so strong.
I think, Andres, you touched on two good things. Immigration is definitely a factor you have to consider because people are coming in. It's not the same number of people just moving around. There's going to be a big shift. But also, one thing, second point eludes me. But the one thing I will say is you might want to look at things like joint venturing, right? That could be, you're right, sorry, the landowners are not in a rush. They're not in a rush. Why would they want to sell? But they may want to develop. So maybe a joint venture might be another idea, right? So it may not look, the deal may not look the way you want it to look, but it might be a possibility to come in. Maybe you're 50-50 or coming in as an equity partner, or maybe you have the money, you come in as a debt partner. So the deal can be structured. It's not going to be exactly the way you want it wrapped in a bow, but it depends what your motivation is to get involved in a deal.
That's a great point.
So we've just going by the poll here, we've what people are most interested in is assignments and pre-construction. We've talked about the investment climate as well. I'll open this up. Like, what are some good maybe areas or opportunities that are good for assignments or pre-construction investments? Are there areas that we all like more than others?
I think right now it'll go back to what your motive is, right? So if you really want to be in a specific area, then then you got to look in that particular area, right? If you're looking for investment purposes, location is key. So again, along the Eglinton line, the future Eglinton LRT is coming there. Construction has been going on forever, so it's going to come. I remember Hamilton was another great area. I still feel it's a great area just because the rental rates have increased significantly every year. It's one of the highest. Now, they partly because of that, the the future LRT was supposed to go there as well, but it was just canceled. Okay, it was canceled like sometime last year, so that is unfortunate. So it's really being in a location where you know there's going to be future value. So of course, Toronto, we know that's like the hub. That those are always going to be great areas to be in, but also looking at where other developments are being built. So so for example, I did a development up in Dundalk, which is about 15 minutes away from Shelburne, okay? And honestly, the whole town is one strip of like is one road, right? But there's so much development now going on there that people saw the future value and they bought, right? And in pre-construction, as you buy in particular phases, the later the phase, the more expensive the project, right? I will say that if you are considering an assignment, to for sure really understand what that assignment means. A lot of people just think that when they buy, oh, cool, it's an assignment. That means, you know, if I have financial trouble later down the line, I can just throw it up on the market and I'm going to find a buyer. It is not that easy. There's so many things that go into it. The builders they always have some sort of guideline where, you know, the project needs to be 80, 90% sold. You can't market on MLS. You need the builder's approval 100%. I had a client reach out and he was like, can we just put it on and don't say anything? You know, I said, no, I'm telling you there. And it was a big builder too. I said, oh my God, no, please don't do it. You know, I'm telling you, we have get your lawyer to get written approval, because what's going to happen is if they find out it's on MLS, you know, sometimes they give you a warning, sometimes they don't. Sometimes it's you breach the contract, you have to close, and then that's it. You can't do anything, right? So all these little things, make sure, you know, you get a great lawyer to kind of review that for you, or have your realtor kind of just break down the fundamentals of it. But just be mindful of what that assignment really means. There's usually fees to it, plus legal fees and admin fees. So just really know what you're kind of getting into.
That's a great point. Ryan, I mean, do you want to talk about the legal side? I mean, this is the importance of just when you're even considering an assignment, or you're buying pre-construction and you want to deal with your ability to assign that project or that unit later on. Like, how important is it to get a real estate lawyer at that level?
Yeah, I mean, I think that one of the things with pre-construction is that people don't initially realize how important that agreement of purchase and sale is. The very first thing you sign, how important it is. You know, they give you the 10-day cooling off period. People just sort of are like, oh, whatever, I'll get my lawyer to look at it. It's like, no, it's a very important document that sets the tone for all of these elements that you're talking about here, Lou. You know, so what is the implication of, and if, you know, and sometimes I think realtors can negotiate specific elements regarding assignments. You know, it's sort of like, you bill yourself as an investment real estate agent, which I've kind of, right? Then you may have spoken to the builder and they may waive a fee to allow you to do it. Most agreements say quite plainly, we are not going to allow an assignment. And what they will do is then they'll attach something later to say, yeah, okay, we will, but there's an exception, which is that if you want to do it, it's going to cost you this amount of money, you know? And yes, sometimes that's a small fee. Sometimes it's a massive fee. But it's really important that you know that. And then you also definitely need consent. You need them to sign off on it. And you're right about the percentages of the building. Like, and you know, 80%, imagine, I mean, right now, for sure, people are holding on to condo agreements of purchase and sale where you know, it says that it's 80% needs to be sold. And I'm pretty sure that there's got to be some buildings out there now that are not at that level, and so you're going to be kind of stuck, you know. So you know, I think the important thing as well is you come to the real estate lawyer so that you get the advice about that, but expectations about what a builder will do in terms of changes should be quite. You know, you got to weigh that. Builders they've set terms. They're working on a budget. They understand, like, you know, they've done a lot of research. So as far as they're concerned, their flexibility is very limited. It's very low. They can't afford to flex too much, given that there's a very clear budget that they need to hit. they've got contractors they need to pay, they've got construction liens against the property, they've got mortgages that are coming, right? And so it's very important that you understand it. It's not necessarily that it can be changed by the lawyer, but it's important that you understand it on the front end.
But it can in some circumstances though. You can. It's hard to negotiate during that 10-day period with a builder's lawyer. They're notoriously, but for the reasons Ryan outlined, they're notoriously unwilling to change. Let's put it that way. But it's possible, right?
Oh, of course. I mean, it's possible. I mean, it's not going to hurt to have your lawyer ask. I mean, your lawyer is going to do what they can to ask and see what can happen and see if there's a negotiation that can be had. Again, it does depend on who the lawyer is on the other side. But, the way that, at least the way the market was previously, was they just very easily will say, look, I mean, either you're okay with this or we just find somebody else. And it's totally fine. I mean, the purpose of that 10-day cooling off period isn't necessarily for you to be like, okay, I'm going to negotiate with these guys. It's for them to say, here's what it is. Are you okay with this? Maybe there's some flex, but not a ton. If you're not, we got another guy. Like we got somebody else that's sort of lined up for this property. Who knows if that will continue? I mean, COVID has had an impact, I'm sure, and we don't know what will happen later. But yeah, it's an important document. That's the bottom line. You want your lawyer to look at it, negotiate what they can, and let you know what can't really be negotiated.
So we're at about 11:50. So we'd invite everybody who's attending, if you want to ask us more questions, please ask questions in the chats. I have a question for everybody. Where do you see the demand supply equilibrium and kind of the market fundamentals? And again, I know real estate it varies widely by market, but let's say we're talking about GTA, GTHA. What thoughts do we have there?
Sorry, Ryan, it looked like you were ready to go.
Oh, sorry. No.
I mean, just based off of where the stats are, like us being, balancing that 10,500 active listings in the entire GTA, it's really not a lot of inventory, right? That's your freehold and your condos. It's spread across the entire GTA. Like, it's really not a lot of inventory. And then just personally being out with my clients, looking up to around, 1.6 to like 300,000 or 400,000, right? I'm still seeing these multiple offers. Maybe it's just, the homes that we're picking because they show nice and they allow us in. I'm finding the virtual tour market, it works better for condos. It's a little bit harder for homes from what I find. I'm assuming because when you're looking at a 3-bedroom, 4-bedroom, 5-bedroom home, maybe in the 800,000s to over $1 million, and you got family, like you have kids, you want to be in the home. And, so the demand, I feel there's a lot of demand that's on the sidelines. I still feel that. I think a lot of families are on the sidelines because now when you actually have to go see a home, a lot of times they don't allow the kids in. Right? It's, if you're a single person, they allow you in. There's no other family members. It's just a couple and that's it. So it's hard for these families, and I've experienced it myself where, I really want my kid, I really want my children to see the home and really get their opinion and we can't, right? There's no way unless the property is vacant. I truly do feel that there's more demand right now. I think the supply is also sitting on the side. A lot of people are waiting to list too. So I think within either the rest of this month or the beginning of next month, I do foresee, more inventory hitting the market as things open up and people, seller confidence comes back, right? And in turn, that opens up more eyes for the buyers. So hopefully that they see a property that they like.
Yeah, that's a really low number, Lou, like 10,000. I mean, and then when you start to thinking about a slider and you just to take it down to like, okay, we need $700,000, okay, to 400,000, and just like that's probably who knows what that is, and then that's
really narrow.
Yeah, and then
absolutely.
You probably are going even smaller, so you go into like, okay, I just want it to be in Newmarket or I want it to be in East.
Exactly.
Probably like, nothing.
Yeah, it's low. You do it by search of bedrooms, bathrooms, how many parking you need. Like it's really, it's a low number.
Yeah.
For sure.
Interesting.
Shehan, what about you? We talked a little bit offline about housing starts in terms of the supply that's coming online.
Yeah, the housing starts have dropped from 150 to 50,000, I think, in Toronto area. So that number hasn't been around since about 2008, 2009, when we had the last recession. So I think that's a key number. There's less houses being built, projects that are in plan being pushed back. I think Lou made a good point. I think everybody's kind of sitting on the sidelines right now. You don't know what happened, right? We don't know how long this is going to last. The curb came in, so people aren't really feeling the pinch or not really knowing which way to turn. A lot of people are just kind of standing, going, okay, let me wait and see what happens. It's only May, early May now. Still, the summer season is there for me to sell and move if I need to. You look at people that are having kids, thinking about moving to new areas with schools. That's September. Well, you're not going to move in September. So you might see a bit of a spike in June, July, I think, and then kind of peter off as the financial strains come in and people either go back to work or go back to different type of work. You might see in the fall into early next year where the finance side comes into play in terms of market demand.
Yeah.
Guys, it is hailing here in Toronto. Just putting that out there.
Seriously.
Summer's coming here. Maybe we have some more months to wait here to figure this out.
It feels like November.
Yeah.
It's crazy.
It's beautiful fall afternoon.
Well, it makes sense, right? During COVID, why wouldn't the weather make no sense?
Yeah. It's the apocalypse.
2020.
So yeah, 2020. I know. 2020. Well, 2020 is basically half over, and it's been.
I know.
It's been quite the year. I mean, I think it's really, my thought on this as we kind of run to a little bit of the close here is it's very, very difficult to make predictions 1 month, 5 months, 10 months down the road. And you see, and it's not because of, it's just because there's so much uncertainty and there's so many factors, right? The immigration, the social, the economic, the jobs, the COVID. There's too many to weigh at once. You've got people, for example, you've got, I know that CIBC, Benjamin Tal, the head economist there, has changed his position a couple of times in the last month and a half in terms of where the market fundamentals are going and what the bank's exposure is to there. You've also heard CMHC saying that prices are going to fall maybe 10, 15%, and they won't recover for another 2 years, so 2023. And then you've got, developers and capital partners like Graybrook and Brad Lamb, just to mention two, who are really still bullish on the medium and long term in the GTA and GTHA. And they're realizing that this is just a blip and that the market fundamentals have not changed whatsoever. And again, we don't know how that's going to change over time with mortgage deferrals, if the bankruptcy rate climbs, and the levels of unemployment is the real key thing. So, I mean, the real thing, and Shehan, we've talked about this, is the joblessness rate. If that, to the extent that continues, and we don't know because people might get hired back, and a lot of people will, but some people almost certainly will not. So the joblessness, in my opinion, also is a very, very, it's a key factor that we just don't know the outcome of yet.
And just to add to that as well, I think there was a poll done, and there are people willing to take a pay cut to stay at home. They're finding that working from home is actually very good. They can get stuff done during the week instead of traveling, the hour back and forth. And so what is that going to look like in terms of income and income to debt ratio in terms of qualifying? If people are choosing a different type of lifestyle, they're realizing this, making dinner every night at 5 is not, doesn't look so bad anymore instead of being on a train. So I think that's kind of an unknown as well that might come into play.
That's a great point. So in the interest of time, it's 11:55. So why don't we go around the horn and give everyone an opportunity to give their final thoughts on investing in real estate, and then let everybody know where you can get a hold of that person. So we'll start with Lou. I've got your information here. I'm just going to share my screen, but how can people get a hold of you, and what are your final thoughts here?
Yeah, I mean, I think there's, like Shehan mentioned, I think there's opportunity in every market. I think it really just goes back to what you want to achieve and what your goals are. I think if you want to focus on an investment, I know that's what this talk was geared towards. Just make sure that you do enough research in the area to make sure that it's a good investment and take everything into consideration. So you guys can find me on my Instagram. It's right there on the screen. So _ Lu Zhou. My email is luzhourealestate@gmail.com. My number's there. But if you go on my Instagram, pretty much all that information is there. So I do a lot of updates with the market, inspirational stuff. I touch upon, some few feng shui tips. So, but I'm very active on there. If you guys want to DM me, I'd be more than happy to have a chat with you if you guys have any questions. So. Thank you so much.
Okay, Shehan, what about you? Final thoughts?
I think to echo Lou's comment, there is investment opportunities everywhere you look. Real estate is a great investment opportunity, either for equity or for cash flow. I think you just have to broaden your horizon or your scope of what you think that investment looks like, be it the form or the area. It could be, maybe a 2-hour circle outside of GTA or even the US. But you really have to, for me anyway, you really have to go by the numbers, right? You have to make sure the numbers work for you and not just, hey, I think it's a good idea. Every market is different and every circumstance is different. So you just got to know what your investment goal is and your time frame and your risk tolerance. I'm not the greatest at social media. I'm trying to improve that. I was working with other clients. I never had to rely on social media. So you can look me on Instagram. I am on there. It's SHANM21. You can also reach me directly at Shehan McLelland at gmail.com. That's my personal, and my phone number. You can give me a text as well if you like.
Yeah, the knowing the numbers always absolutely key. Hey, Ryan, what about you? Final thoughts?
Look, I'm cautiously optimistic about the future here. I think that's the great thing about this panel is we're all sort of kind of optimistic about what's to come. It makes sense that people are cautious now, if that's true, but I think it's important. Like, we need to maintain an optimism about the market. I think there will be a shift. There will be some adapting over time. Like Shehan's mentioning, people are going to stay home. What is that going to do to the real estate market? Well, okay, so then you've got to be, as a real estate investor, you've got to sort of factor these changes into the equation. You can't just do it without thinking about them. So I'm optimistic that, Canadians are going to open their minds to the possibility of real estate in a way they may not have thought about previously, but I still think that it's going to grow over time. I think we're going to see some growth once we start to see things open up a little bit. In terms of me and reaching me, one of the founding partners of Aura LLP with Andreas, but you can reach me on Instagram at Ryan the Property Lawyer or at Aura LLP or _LLP. Email Ryan at Aura LLP, and then you can reach me by phone if you'd like. You can send me a text there, and then I've got a Facebook. If you click on the link for me, or if you just did a Google search for me, you probably find it. And now we're just trying to build our YouTube channel. So this is going to go up there for those of you who are going to watch this at a later time.
Okay. As for me, I'm very bullish on the GTA and GTHA market fundamentals. I think that again, the demand supply disequilibrium has not changed. I think there are going to be changes to pricing and availability that we haven't seen yet. I don't think that the market has absorbed all the financial and job loss and uncertainty. It's still going to work its way through this system. I think that will take 4 to 6 months to really have a more complete picture, but I think it will continue for another 10 or 12 months. At the same time, I do think that every market is different. And I really think that at the end of the day, things in the downtown Toronto core are in terms of the price per square foot, it will maintain in the condo market. I think what you're going to see on the freehold single family home end of things, I think that the prices there were more inflated due to the over amount of bidding, and so I think that you're going to see a bigger delta change there. But again, I think that the average price is going to hold up too. So in terms of where you can get in contact with me, it's all right there on the screen. The best way is probably on email. You can give us a call there, and please check out our Facebook and YouTube channel as well for Aura LLP. So it's 12:02. So it just, in the interest of time and being respectful of everyone's Mother's Day, I want to let's end it there. I want to thank everybody for joining us this morning and taking time out of your day. Thank you very much. So just once again, this recording is going to be made it'll be made available on YouTube, and we'll also send you guys a link as well. So thank you everybody for joining us, and have a great weekend.
Thanks all.
Take care.
Mother's Day weekend, everyone.
Bye.
Bye everybody.